Welcome back to the Roads to Wealth podcast. I'm your host, Josh Rhodes. And today's guest, we have the sketch guy, Carl Richards. When I first graduated college and I took the initial sales role, it was a smile and dial sales role for a cybersecurity company. And my boss at the time, now mentor, his name is Brian Miller, told me they're just a couple months into that role, when you're able to explain what we do to your grandmother, you've become an expert at what we do. Take that for what it's worth, right? I think in some cases, it's really easy to talk about some of the jobs that we have, but for this managed cybersecurity company, it resonated really well. It resonates even better when it comes to finance. Carl Richards is a certified financial planner. He's also the creator of the Sketch Guy column that appears in the New York Times weekly since 2010. He's also the author of 2 books, The One-Page Financial Plan, A Simple Way to Be Smart About Your Money, as well as The Behavior Gap, Simple Ways to Stop Doing Dumb Things with Money. Carl is an extremely busy guy. He and I have been chatting back and forth. I've been trying to get him on the podcast literally since day one. Today, he gave me right about 40 minutes to squeeze in. And so I did my best to really just squeeze or extract as much as I could in that 40 minutes. I really, really appreciate his time, his energy. Hope you guys enjoy. Let's jump right into it.
It's the road to the wealth. I do it for health. For my kids and my spouse. Financially sound. You're the bad dad.
And here we are. Carl, man, I really, really appreciate you doing this. I'm a big fan. The only thing I'm a bit frustrated with is the fact that I don't get to see the Sharpie in action, man. I've been able to consume a ton of your information over the last few months. As you know, I've been reaching out to you for 5 or 6 months now in an effort to get you on. I repeat in every episode of mine, at least it feels like every episode, when someone has the ability to take a very complicated subject, something like finance or something like cybersecurity, right, and make that topic simple and give someone the ability or to be able to simplify it enough where most can understand and consume the material. There's something special about that, right? And you're doing it on the back of a napkin drawing. I mean, it doesn't get any simpler than that. So, man, I really, really appreciate you doing this. And I'm a big fan of yours.
Oh, thank you very much. I'm super excited to chat.
I like to start most of these somewhat in the same fashion in that I don't want to steal your thunder here. Obviously, I give you an offline introduction coming into the podcast, but can you maybe just start at a high level of maybe telling the folks just a bit about who you are and what you have going on today?
Yeah, so I started years and years ago as a financial planner and really probably a financial advisor in the beginning. And I got into the business sort of by accident, actually. I wasn't sure what it meant to give financial advice. And as crazy as that sounds, it's not uncommon. I quickly figured out it was what I thought was a spreadsheet and calculator job. I thought it was all about spreadsheets and calculators. And then I started dealing with humans and realized this wasn't about spreadsheets or calculators. It was about emotions and feelings, fear, greed, stories our parents used to tell us, the Bible, like there's all sorts of stories around money and they could get complicated and messy really quick. And I discovered through just a series of kind of fortunate accidents that if I worked really hard to make these ideas simpler, people understood them better. And if I could explain them on a whiteboard, the Sharpie and cardstock even better. And so I started doing that and I would just share it online. And when I started, it was just my mom and my sister that would read it. And I found out later my sister was lying. It was just my mom. I kept doing it. I kept doing it. I kept doing it. One thing led to another. And I'm not skipping a lot of steps. And so that started sort of this weekly column for them called the Sketch Guy, and where I would take a complex financial subject and try to reduce it down to a simple drawing. Did that every week for 10 years. And that led to a series of books and a bunch of talks. And so in the essence, what I'm trying to do is take complex subjects and make them simple. And I've used money as the entry point, not because I care particularly a lot about money, but because money tells me a lot about life and about humans and what's important to us. And money seems to be wrapped up in all that other stuff. Now I just spend my days trying to take this subject and make it a little simpler, a little easier to understand for all of us.
Yeah. And you've done a phenomenal job at doing just that with a broad, just a variety of topics. 2 of them you've really doubled down on. One of them you've labeled the behavior gap. The other one is this realistic financial plan, right? Or this one-page financial plan. My goal is to kind of make the most of the next 40-ish minutes here and have this interview be somewhat twofold. First, let's cover the behavior gap and what is it and how did you come up with it and why does it exist and how do we overcome it? And the second piece, we'll talk about the financial plan itself. When I bullet it out like that, it sounds so simple. When you look at your drawings, it looks so simple, but each topic could be hour-long podcast, right? So I'm only going to scratch the surface here. I mean, both of those topics have full books from you. So we could spend a lot of time unpacking them. I'm going to do my best to kind of scratch the surface here. On that first bullet, the behavior gap, again, just in the effort to not steal your thunder, man, I'll put the ball back in your court. Your first book is titled The Behavior Gap. Do you mind just maybe at a high level talking through what is that, how you found it? Again, just kind of catching us up to speed on what exactly, why that exists and what is.
Yeah, so it started as me noticing a very specific problem. And then it got general, a little bit more general from there. And the very specific problem was there were specific behaviors that we engaged in around the way we invested money. And again, like I said, it got more broad later. Like you could apply this to saving and budgeting and time and creativity and a whole bunch of things. But there were specific behaviors around the way we invested money that were well-intentioned. Like the classic one, it's well-intentioned to think that the job of an investor is to find the best investment, to constantly be searching for the best investment. That sounds reasonable. It's what we've all been taught. But that leads to behavior that produces suboptimal results. It leads to behavior that not only doesn't help, but it actually hurts. An example of this is if you're always searching for the best investment, what you're normally doing is you're looking at recent performance record or what's done well in the recent past. And by recent, you could even mean 3 to 5 years. If normally you're not thinking that way, most people are looking at the last 6 months, the last 6 hours. But even if we looked at the last 3 to 5 years and you find something that did really well, you think your job is to buy that thing. And that would make sense in every other area of our lives. Like it would make sense to hire, if you were going to remodel your kitchen, it would make sense to go look at the recent remodels that the contractor had done and expect the remodel he or she would do on your house to be as good, if not better, than the recent ones. If you're going to hire a new football coach, it makes sense to look at their track record. And so it would make sense that we should go look at recent performance for investments, and then we should buy the ones that have done recently well. But turns out that causes problems. And it causes problems because it's essentially buying high and selling low, which is the opposite of what probably all of our mothers told us if they told us anything about investing. So that's one example of a well-intentioned behavior that produces suboptimal results. And I called that gap, like this well-intentioned behavior, the behavior and the results was producing a gap that we needed to close.
I listened to a presentation of yours. You gave the presentation something like 5 or 6 years ago, but I watched it yesterday on YouTube just in preparation for this. And you illustrated this behavior gap on an iPad where you drew it up and I got to watch it in real time. And you labeled it, the difference between investment returns and investor returns. Again, man, just watching you simplify it down to 3 or 4 lines, there's something moving about that. The point that we're trying to extract from that is that the average investor tends to do worse, or they are worse off than really just market averages, right? And that they're making these gambles, and to your point of this dumb money, right? Of buying high and selling low. I guess maybe I'll even pivot on that for a second. You sort of beat that subject up, right? That the average investor will buy high and sell low, right? You present on it at conferences, you write about it in your book, you draw about it. There's a chapter dedicated to it. In fact, I think the buy high, sell low is even on the cover of your book, right? And so it's something that we really beat up. I'm curious that, you just mentioned, we're taught at such a young age to buy low, sell high, and then we end up doing this completely ass backwards. We know better, but we still don't do better. I'm curious into maybe your thoughts on why exactly that happens. Why do we still fall into that rut or that trap when we know better?
Yeah, it's because we're wired to. So obviously no one sets out to buy high and sell low. But if you have a pool of money that you're looking to invest, the first thing you do, and it's reasonable, is you look at what's recently done well. So that's step number one. The next problem is this idea, so that's called recency bias. We look at the recent past and we project it indefinitely into the future. Then problem number two is just the wiring we have. We are hardwired as humans, and this wiring has kept us alive as a species, right? We are hardwired to get more of something that gives us security or pleasure. And we are hardwired to run away as fast as we can from something that causes us pain. When you translate, now again, useful, right? It's kept us alive as a species. In other areas of our lives, that's really important. If your hand's on a burning stove, you're hardwired to take it off. That's useful. When you translate that to investor behavior, what happens is when the market's going up, and we could use a specific stock if we wanted to, but let's just keep it broad. When the market's going up, that the news we read and the things our friends are saying and everything that we're seeing is reinforcing that, hey, the herd's going that way. And it's giving us feedback of like, wow, this feels good, right? This feels like security and or pleasure. I want more of that. Then we have the added element of the herd. We've been trained forever. The school system trains us this, but we're just genetically wired. Stay with the pack. If you leave the herd, you will get eaten. Don't stand out. Keep your head low. Don't cause any problems. Like, don't draw attention to yourself. Like, all of those things are wired into our behavior. And so if the whole herd, which is the definition of a rising or a falling market, is everybody's going that direction at the same time, it feels crazy to not go that direction. And so it's easy to see why. Like Warren Buffett's quote is the opposite of that. He says, we want to be greedy when everyone else is fearful and fearful when everyone else is greedy. That's cute, but really hard to do. So that's why it happens. And it's totally natural. Like that's the thing we need to remember is like, let's give ourselves a break. If you were to design a poor investor, you would design a human. And so we need to realize like we've got to come up with guardrails to prevent that behavior that feels completely rational. On the way down, it's just like the burning stove, right? The market's falling. The news is yelling. Everybody's saying, you got to aren't you going to do something? All of that is screaming at you. You've got your hand on a burning stove. You don't really care what the data, the long-term average is. All you're thinking is, I'm taking my hand off this stove. Right? So we've got to build guardrails in to protect us from naturally, like behavior that feels natural and even rational in the moment, but turns out that there's this gap between what feels natural and rational in the moment and what will actually help us long term.
And this is the amount of noise and the chaos that noise produces is something you hint at a bit. You talk about it even more. This is a pretty good segue into whether you're a new investor or to your point, if you've invested and you're more worried about the short term, you talk about how folks will they want to consume more information, right? So they start to open books and go to websites and read blogs and they turn on the news and they download their stock apps and they pick up their phone, right? There's all this information giving you day by day updates. And if you're reading books and blogs, then that information is likely pulling you in two different directions, right? Buy more, sell now. It's just so much going on. And I think in the midst of all that, it's important to keep in mind that some of the folks that have written these books have far more capital than you. Some of the folks that are giving you advice on the street have far less capital than you. Nobody has the same goals as you. And the point that you make here, and I am stealing your thunder at this point, the point that you make in the book is ignore the information. That may even be the title of the chapter. Ignore the information. I maybe put the ball in your court and to expand on that idea if you'd like. And then a follow-up question is, where do you get your information from?
Yeah. So, I mean, it's really important to remember that I don't normally pass along Buffett quotes so frequently, but he said, the hallmark of our investment process is benign neglect bordering on sloth, right? And so investing, again, it's counterintuitive. Investing is one of these things that after you've done the hard work of deciding on how to build a portfolio, the single best thing you can do is be lazy, right? The single best thing you can do is nothing for a very long period of time. It's not very exciting to read news that says do nothing every day over and over and over. So that doesn't sell. It's not even like I don't think it's a big evil conspiracy theory on the news' part. It's just like what sells. So I think if you're going to absorb that, if you're going to consume that, you need to see it for what it is. It's entertainment. It's not investment news for all the reasons you pointed to and more. It's meant to be entertaining. It's a little bit like, if you're into it, it's a little bit like ESPN and CNBC are no different at all. It's just a different subject. But it's not actually meant, like, you're not going to become a better baseball player by watching ESPN over and over and over. You're going to become a better baseball player by day after day after day taking swings, right? So on the investment side, you're not going to become a better investor by consuming news. You're going to become a better investor by doing what great investors do. And I can't think of very many exceptions. What great investors tell you to do is buy really good things. Now, people will argue about the definition of good, but buy really good things and hold on to them for a very long time. That's it. I would suggest don't watch it. Like, I just think that CNBC is the financial pornography network, right? It's FPN. It's not CNBC. But others would suggest it's fun and it's entertaining and it's the circus. And I have friends who love it and that's cool, but they don't act on it, right? So that's how I think about the news.
Yeah. And I didn't have this one jotted down, but it reminds me of, I noted it in my notebook, reading your book, of something along the lines of, the less I know, the better I feel, or something like that, right? It's like, once you've built your plan, you've done the heavy lifting up front, you've set that 30-year stake in the ground, you kind of know where you're headed, back out and get out of the chaos, right? You'll feel better in all ways because of it. This is a really, really good pivot into that second bullet that I had mentioned of, let's talk a little bit about the financial gap, and then let's talk about sort of this next step of building a financial plan. Right? We just made the point, you can't really, it's not that you can't trust, but it's really hard to sift through the noise and see what's smoke versus where the fire is at when you're consuming all this different information, right? And so I think my first question here is, how the hell do we build our financial plan, right? This is a sort of our financial economy versus the financial economy. Maybe even a better first question is, what exactly is a financial plan? And as I picked up your book, I pictured a financial plan being something like, a 20, 25 page document, and it's trying to just predict your future and you follow this. After chewing on your information in your book a bit, it's definitely not that, right? So what exactly is a financial plan?
Yeah. So I think a financial plan is, to me, it's a document that reminds me of what I was thinking clearly. And so the step to creating that is to first think clearly. Like, this is really hard. It's really hard for anybody to do because we are so caught up in mimetic desire, like seeing what other people are doing, mimicking other people. It turns out it's really hard to get clear about what your own goals are, because you're never sure if they're yours or somebody else's. You can't tell if it's Instagram goals or your mom's goals or your friend. So first get really clear. And the only way to get really clear is just simply to guess. I think I want to go this direction. And so a financial plan would be a place where you write that down. You say, okay, my goal, and here's an exercise, like one exercise to do would be, I would say even 3 years is a long time, but I would say, if we were talking 3 years from now, what would have to happen professionally, personally, financially, for you to consider the last 3 years a success? And then you just guess, because depending on your age, 3 years may represent 20% of your life, or it may represent 10% of your life. You just guess, I think I want to be here. And know from the beginning, this is not bad. Know from the beginning, you're going to be wrong, which is why you're going to ask this question again next quarter or next month. So financial planning really becomes a process of guessing where you want to go, then building a plan on how to get there. And the plan may look like, I think sending my kids to college is really important. We just had a baby that, let's say we just had a 1-year-old. I think sending them to college, having money to pay for college would be important. It's a guess. I'm not even suggesting that. It's going to be really hard for you to figure out if that's even important to you because everybody else says it's important. But let's say you decide that is. Okay, that would be something I'd write down. What could I do the next 90 days? So I'd start with this vision goal thing, and we're just going to use 3 years, but you could use 20 if you wanted, whatever. Then you break it down to specific goals. I want to fund an education account for my kid, as this example. Then the next step on a one-page plan would be, what's the next micro action I could take? And by micro, I mean It's so small that you almost don't even feel like it's worth doing. So it could be, I need to research where to open an education account. Spend a half an hour figuring out researching where to open an education account. After I complete, and then we just cycle through that process. So, okay, I did that. Open it. Okay, fund it with the $50. Okay, set up $50 automatic out of your bank account. Cool, done. What's the next goal? Geez, now that we've had a child, I really feel like we should have some life insurance in place in case one of us passed away. All right, like that document that shows you that that's what you're doing. It's a living, breathing document. Most people's financial plans are 2-inch thick doorstops that they never look at again. And it's no wonder most people are frustrated with the industry. The people who sell financial plans is because that's what they think it means. What a real financial planner and what real financial planning is, the process of being less wrong tomorrow and setting a course and continually adjusting back to that course. And of course, changing the course when you learn that it was wrong. Like, turns out we're not so sure we want to make sure the kid has enough money for education. Okay, then change course. That's okay. You're allowed to do that.
My favorite thing, I've mentioned a couple times, I'm a big fan of yours. My favorite thing that I've pulled from you, I can almost guarantee you that I will carry it with me the rest of my life, is the analogy or the topic you're talking about now. And you draw the analogy. It's so simple, man. You draw the analogy to the pilot and flight pattern. For some reason, as you jogged through that in your book and then you talk through it in one of your presentations, that resonates so well with me. I'm going to just regurgitate it in the effort of saving a bit of time so I get to a couple other questions. But the idea of setting a 30-year marker out there, a 30-year stake with your point, a few assumptions, just as a pilot would get in his airplane and know, okay, I'm headed to New York or wherever he's going. Once you're off the ground or once you've initiated and you've began to execute your plan and you start to pull in more information, the pilot is now in flight and there's a bit of turbulence. And so the pilot's got to go up, right? Or he's got to change his course. It's the same thing with as you're pursuing this financial plan of yours, and that you set the stake in the ground. And then as you get more information, some sort of financial surprise, good or bad, or your priorities shift or whatever it is, you're able to make these small course corrections along the way. And you'll find at the end of those 30 years, you are at the target you wanted to set on. As that pilot makes his small course corrections, he's going to end up where he wants to be, right? If he doesn't, if he takes off and he's just 2 degrees in the wrong direction, but he never course corrects, he's going to end up in a totally different location. I'm sure I butchered that somewhere along the way. Is that somewhat accurate? Anything worth adding, man?
Yeah, no, I think the only thing, no, it's good. I think the only thing worth adding is that's the interplay. Like the flight plan before you take off is still actually important. I've asked pilots if they prepare a detailed flight plan before each flight, and they all say yes. And then I always ask them, how often does the flight go exactly according to plan? And they all say never. So it's the interplay between having a plan and the course corrections. So a financial plan is worthless without the ongoing process of planning. And I think if you understand that interplay, and then the one thing you have to add to the pilot analogy is we don't always know where we're going. We need to be open to the idea, like when I leave Los Angeles, I'm headed to New York. Okay, cool. That's my guess. In this example, we're also saying I could change my mind. Because, of course, my goals are just guesses. I don't know. So we sort of are trying to add in like relax. It's not about knowing. There's so much about financial planning that puts so much pressure on us to feel like we're supposed to know. And we can just relax. It's not about being right up front. It's about being less wrong each day. And if you realize that, you're starting from a point like where new information becomes available. You don't have to beat yourself up over that. Like you literally couldn't have had. So if your listeners, especially if only if they're not driving, if you're sitting in a room right now, look around the room as hard as you can. Like try to take in all the available information. Like look really hard, right? And then take one step forward and look again. And you're going to see new stuff. No matter how hard you tried in the previous location, you wouldn't have seen that stuff. So that's all it is we're saying, okay, make a guess, take a step. And the step literally is just like the next action, another day goes by. New information will become available. As the new information becomes available, incorporate it and repeat that cycle for 30 years. And you'll have a really good chance of narrowing in on the outcome that you're hoping for.
I love that, man. I'm going to ask you, it's probably my toughest question that I brought to the table, just knowing sort of your take on things. Earlier, we made the point, and you echo it a few times in the book, whatever is right for your neighbor is almost always not right for you. Simply because we've got different goals, different strategies, we're at different times in our lives, all sorts of factors play into that. But I want to try and extract at least a few ideas or assets that our followers and I can chew on and make sense, see if it actually makes sense for us. And so I think my question to you is you mentioned earlier, you encourage a really simple portfolio, right? Something that we can sort of, for lack of a better term, set and forget. It obviously course correct along the way. What are some of the assets or mutual funds, index funds, or real estate? What are some of the assets that you encourage followers, listeners, your customers just to maybe take a look at?
Yeah, look, I think John Bogle's advice when he talked about using index funds, he said, there is advice that's better than this. There is some advice that's better than this, but the amount of advice that's worse than this is infinite. So unless you have some interesting, I've been doing this 25 years. I can name on one hand the number of people I know that are exceptions to this. The simplest thing, there's so many other things that are more important than, I know we think it's the investment choice is the most important thing in the world until there's so many other things, until you get cash flow right and you're safe. You can have, I'll just give you this one example before I answer that. You can have the best portfolio ever created by the mind of man ever. But if you don't save any money, it doesn't do any good, right? You can also have the best portfolio ever created ever, and you only get one behavioral mistake. If you get scared out of it once a decade, you may as well have kept your bed under a mattress. So until you get that stuff right, I would pick the simplest solution. Here's the simplest default solution. This should be the default, and you should add something better to it if you can come up with it. The default should be a Vanguard passive life stages fund. Right? And it's auto rebalanced. It all happens underneath the hood. You don't even see it. The things that matter are expenses. It's diversification, expenses, and behavior. And you would nail it with those.
That was going to be my next question is what are we actually looking at? And I want to make the point here real quick. I've asked that question, first investment or for someone that's getting started, where do we look? Where does someone look? I've asked that question now to 4 or 5 CFPs. And I've gotten the exact same answer from everyone. So I think just a sidebar to the listeners, something that I'm starting to note, there's something there, folks. It's being echoed. We've heard it every time I've asked. There's something there. So let's make sure that we're capitalizing on that sort of advice and what we're hearing. I love that. I've done my best here to cover 2 massive topics in 20-ish minutes apiece. Knowing just a couple minutes here, maybe I open the floor one time. This has been all over the place. It's rapid fire questions. I could fill another 6 hours with questions and stuff that I've laid out. I tried to boil this down to, again, just scratch the surface. But now kind of knowing where my questions are coming from, who we're targeting as far as audience, listeners, what we've discussed today, I want to open the floor one time just to, is there anything that we haven't discussed that's maybe worth mentioning or kind of just drawing some attention towards?
Yeah, I would just emphasize what we just hit on, which is look, when you're relatively young and smart and aggressive and you want to be successful and you're driven, all those words, those words all play against you as an investor. It's really funny. The smartest people that I know that are really familiar with whatever, fintech and Bitcoin and all of these things that you feel like there's got to be a better answer. I'm just telling you, the smartest thing you could possibly do is set up a super simple, and I would just use a Vanguard lifestyle fund or the S&P 500 index if you want to make it super simple. I think Vanguard lifestyle fund, a diversified one fund thing. And here's what I would do. I would set that up. I would figure out how much money can I afford every month to save. So let's just say that's $50. Set that up and automatically save $50 a month. Then every month, once a month for 1 hour, I would sit down with my credit card, my checkbook register, my credit card statement. I'd just sit down and I'd look at my spending and I would try and find free money. I would try and find, is there anything I could cut out? And so let's just say you find that gym membership that you haven't used in 6 months, you've been paying $25 for. Just cancel the gym membership. And as soon as you do, go over to your Vanguard account and go from 50 to 75. I've had people do that. I've been working with people for over 15 years on that. I've got friends who couldn't afford to save anything that are now saving $1,000 a month and have been for 10 years. because they just keep chipping away at it. Like I can add $5. Oh, look, I found $5. And you start seeing the accounts. I've watched people go from 0 to $1 million, right? Now it took a decade, but if you start now, like whether you start now or 10 years from now, a decade's going to go by anyway. And so then I would take all that extra energy that you have around ambition and being smart, and I would focus on building other sources of income, right? Things you can control, become a no-code entrepreneur, right? Like build some other source of income, do a side hustle, increase, get a raise, find a way to upskill so you can get a new job. Like that's where I'd put all that energy. That energy put there, the return there is 10 times the return you'll get on that energy if you try to put it over here. Because chances are, if you apply that energy over here, it's going to cost you money. I can prove chances are it's going to cost you money. Over here, like, can I get a raise? Can I get a promotion? Can I find a new job? Can I start an extra business that makes me $150 a month and just put all that into the thing, right? And take all that ambition, all that smarts, all that intelligence that you have, and I have no doubt, and apply it over here. Do that for 10 years. You'll be thrilled with the outcome.
Yeah, man, I love that advice. I know I'm on time, man. Closing comments for the folks that have tuned in. You've got a lot of content that we can consume, that they can look at and start to digest. How do folks find you? How do they contact you? All that good stuff.
The single best way is to go to behaviorgap.com and scroll down to the bottom and sign up for my weekly letter. So every week I send out one sketch and as few words as possible. So I work really hard to send you better but less. The goal is that it will take you 2 minutes to read, but I'm going to hopefully make you think all week. That's the single best way. The second way would be Twitter, but those are the two best ways.
That's perfect, man. I've been tracking this for 6-7 months now. You've exceeded every expectation I had. So I can't thank you enough, not only for your time today, but for working on this ever morphing and complicated topic, this finance topic, and making it simple enough for us and me to digest. I will have everything that we've discussed linked in the show notes. There's a lot there. I'll make sure everything's included. I've got lots to digest or lots to talk through here. I really appreciate your time. For the listeners, thank you all for tuning in. I appreciate your ears and stay on that grind.
So good. Thank you.
It's one of those podcast interviews that you sort of lose yourself. I definitely didn't want it to end. And at times I damn near forget the microphone's in front of you, right? I mean, Carl's extremely easy to chat with. I'm so grateful for his time. Again, I know how valuable that was. I have 3 or 4 really big takeaways here. Hopefully you guys got as much value out of that as I did. Probably most important is the significance of having a plan, both short-term and long-term plan, right? Understanding the end goal, where are you headed, keep that destination in mind, and then along that flight, along that journey, continue to course correct, right? As you take those steps forward and you get new information, continue to evaluate the end goal and course correct. I love the comparisons there that he continued to draw, and I thought there was really good takeaways. 2, his point that he really beat up, that investing is supposed to be simple. The more you complicate it, the fancier or the prettier that we try to get, the more that we expose that behavior gap. The quote, he used several of them, but the quote from Bill Gates around the hallmark of our investment process is benign neglect, borderline sloth. I thought that was, what a great time to pull that out. The simplicity of the portfolio is really what we're trying to discuss there. And 3, I think to play into that simplicity piece, once you have the plan, it's simple, it's easy to execute, then evaluate all of your other expenses. What can I chip away at? And then immediately funnel that money month over month into that plan that you've created. I think those 3 sort of feed into one another, a common thread throughout that interview, and just really, really awesome takeaways. I cannot thank Carl enough for his time, even more so to you and the listeners. I will have several of Carl's graphics and drawings on my blog post this week. He typically sells those to other financial planners. He puts them in a calendar. You've got the ability to actually buy them on his website. He's given us access to actually layer them into our blog post and help with that. Really grateful for that as well. If you guys have any questions, comments, follow up, please reach out to me, info@roadstowealth.com. Other than that, that's all I have for you this week. I'm looking forward to chatting with you guys or getting in your ears next Friday. Until then, stay on your grind.
So smooth. You know what I'm saying? Q1 made the beat, by the way, just to let y'all know what's going on. Tell them, it's the road to the wealth, yeah. I do it for health, yeah. It's the road to the wealth, yeah. For my kids and my spouse, yeah. It's the road to the wealth. I do it for health, yeah. For my kids and my spouse, yeah. I'm financially sound, yeah. It's the road to the wealth, yeah. I do it for health, yeah. For my kids and my spouse, yeah. I'm financially sound. If life about purpose, it give you something to seek in. I've been setting cash goals, financially speaking. I've been finding blessings through all of these demons. I pray to God, I give you something to reach with. See, I give you something to leave with. This life about goals and achievements. Your eyes on the prize, they hit out your mind and pray to whatever beliefs in. Teach on the way, know that the beach on the way gotta shine hard. And the teacher's water, know that little seed, they gon' grow tomorrow. So every day gotta come with us. So they give you something to stand on. Make the false off when you land raw. Make you put some new friends on. It's the road to the wealth. I do it for health, yeah. For my kids and my spouse, yeah. I'm financially sound. It's the road to the wealth, yeah. I do it for health, yeah. For my kids and my spouse, yeah. I'm financially sound. You the bad dad.